All right, with Mr. Billy Guan here from Arkshire. Tell us what your superpower is, bro.
My superpower is that I sell things without selling things.
There we go. And then what magic tricks do you have today? Oh, dang. Dude, he's got this down. Check it out one more time. Yeah. There we go, magic tricks. He's got actually many more magic tricks. Comes Billy Guan, right? The Billy Guan.
Yeah, someone took Billy Guan, and that guy's not active, but I don't want to pay 10 grand.
I know, right? To grab that handle. Yeah. Appreciate you coming to the first ever lunch and learn that we got. We got Chick-fil-A going, but since you're the one and only, we can actually customize a real tax plan for you. So this is actually what we charge our clients $3,000 to do. And because you came here today, you're a lucky winner. You're going to get all the stuff on here. So pretty much what this whole plan is going to be the blueprint for what you can do. Send it off to your CPA, and then just make sure you guys have it and implement it. If they're not already implemented, I'm sure they are. But then that way we can go through it all, make sure you don't leave a single dollar to the IRS. All right, cool. So this is kind of like my big cheat sheet stuff. This is our master template, actually. And then I just remove stuff and make it as I go. So income structuring first is kind of like where we start. So either you're S or C or a sole proprietor. For you, what are you right now?
I'm an LLC taxes S-corp.
S-corp, okay, cool. And then is your net income below or above 750 grand?
It's below.
Below, okay, cool. So you're good now. So I'll just make a note, so already done. And then when you start clearing net income, then look into switching into a C-corp. So C-corp, what's gonna happen here, essentially like C-corp's only taxed at 21%, and then at 750K, you're at 37. So then that delta of 16%. So save 16% on your taxes. So once you get that part, yeah, I pretty much put every dollar back in my business. Someone asked me what your net, I'm like, I think we're negative this year. Good, but it's good in a good way. Cool. So S-corp, reasonable comp. What do you do for your reasonable comp, and who's your payroll provider?
ADP.
ADP, nice. Yeah. ADP. And then how much do they bill you every month? You guys run every month?
Yeah, it's like 35 to 50 bucks.
Yeah, because there's sometimes where people aren't optimized on the ADP, so their sticker rate is actually 120.
Oh, wow.
And then depending on like how much you negotiate, that's how much you get it down. So yours is good.
Sweet.
Yeah, so you guys negotiate well. Nice. And then what do you pay yourself on W-2?
Shoot. As little as possible.
Yeah, 20, 30 grand or something?
Something like that. I don't remember off the top of my head.
Okay, nice.
Yeah, it's all of my tax returns.
Okay, cool. So this one minimum wise, so you want to just make sure so tax is two things. One is optimizing money. Two is actually staying compliant, not getting screwed by the. So this one, I would probably just double check. So 20 to 40% of your net income should be your salary, or you could do market rate, but it's hard to have market rate for what you guys do in the financial services. And then the last one is enough to max out your 401k.
Gotcha.
Are you on a 401k now or
no?
not?
I don't use 401ks just because I don't like the tax deferral on it. But,
okay. Do you do
I do
all the other good products?
Yeah.
Actually, since you don't do 401ks, what do you do?
I do a supplemental executive retirement plan. So like an executive bonus plan. So my company payrolls me X amount of money for putting into a cash value life insurance strategy. So they get my company gets a tax deduction, but me, myself, as the employee of my business, I get tax-free retirement.
So you do the executive bonus plan, and then you go buy what kind of insurance with it?
Index Universal Life, IUL.
So you do executive bonus plan that then buys an IUL. So that's what you do. Mm-hmm. Oh, so then you have access towards it. Plus, that's your wheelhouse. So if you need IULs, executive bonus plans, like all that space, you're the man for that. Nice. Okay, cool. So yeah, I'd probably just minimize it, but just it's minimized as much as possible while staying compliant. Because you pay yourself like zero, the IRS will get pissed.
Yeah.
And then, but make it, another one that I like to use as a rule of thumb is enough to pay bills. Yeah, because then the IRS can't argue against that. Because if you take distributions too often, then they'll be like, wait, are you actually paying yourself enough? So you just want to do this quarterly, max for distribution-wise.
Okay.
Yep, quarterly. All right, cool. So we got that. So then, all right, books. You do your bookkeeping? Who does your bookkeeping?
I have QuickBooks.
QuickBooks? You do it yourself?
Yeah.
Okay, cool. Yeah, cool. And then the main crazy thing on QuickBooks, I was like, oh shit. The stuff they look at the books is actually quite interesting. The receipts actually matter.
Oh, so you have to take pictures of the receipts and everything?
If you can, because QuickBooks actually has OCR to scan it now. If you can, I would like highly recommend it. Because right now, dude, the auditor asked for like probably 60 plus receipts. And like, I think the taxpayer and their assistant went to town. But like most people don't have receipts. So if you have QuickBooks, which is really good, then like just take the photo and it should auto link. Yeah, so I'd probably do that if I were you, just like as a pro tip, just in case. Because like audits, what I'm kind of anecdotally noticing is kind of going up right now. And I think it's because of AI. AI is starting to shoot out the things, because I also saw like Palantir almost put in $1 billion to the IRS.
Goddamn.
I was like, fuck. It's like, I get it, but at the same time, oh, this is not good for taxpayers because documentation is not their best. Yeah. Okay, cool. So yeah, just make sure that's good. And then your balance sheet balances, what's your CPA reviews. Besides that, on bookkeeping, then you're pretty okay. And then your, let's see, so Archshire pays you 1099, right?
The financial institutions that we work with do. So they 1099 me my commissions and stuff.
Oh, okay. Okay, got it. Okay. And then I guess in that case, just making sure your 1099s tie out to your gross revenue. So essentially, say you get 4 1099s and they add up to 500,000. And then if you're on your QuickBooks, it's 98 and you don't report 500, it's like an auto trigger for audits. So just as a heads up there. So for using your home, do you guys own or rent right now?
Oh,
Okay.
Yeah.
Are you guys milking the Augusta?
I think so.
Okay, cool.
Because that's the 14-day renting
14 days.
in my office, right?
Yep. So yeah, as long as you got the Augusta, cool. So 14 days and then market rate on that would be good for you there. So you don't need to do home office there. Do you guys have an accountable plan set up yet?
What's that?
So this is essentially a employee reimbursement program. It sounds stupid because we're like one-member S-corps, but to technically get reimbursed from your S-corp to you legally without the IRS counting that as actual taxable income to you, you need to adopt an accountable plan. And essentially is saying, hey, I spent $50 on Chick-fil-A today, but it's for the company, but I used my personal card. I need to get reimbursed. So it's just like having that reimbursed plan on that. So just adopting one. And then if you ever run into issues where stuff goes on the personal card, or if say your phone is like a shared plan, you need to like prorate part of it, then you can take that. So generally speaking, it's like phone, incidentals, travel, like prorated things that are personal in nature that you ran on personal cards, but you can actually use it for business purposes, but you didn't run it on a business card.
Okay.
Yeah. So I'll give you our playbook here.
Okay.
It's like the full ass playbook. You just fill it in.
Sweet.
Yeah. So this is when shit blows up. This is why we don't care about the IRS. Because fuck, bro, here's all the docs. I don't give a shit.
Gotcha.
So I'll link that here for you, bro. So yeah, have that in place. It's paperwork. Yeah, nothing special. All right, fringe you don't need because you're a one-member S-corp. When you're an S-corp, if you provide fringe benefits, it gets added back as taxable income. So yeah, you don't do fringe benefits. Oh, you writing off the Tesla?
My Tesla doesn't qualify, I don't think. It's a Model Y, so not heavy enough, right?
Oh, you can still do mileage.
Oh, yeah. The QuickBooks track it then.
Oh, sweet.
Yeah.
Okay.
So I work from home mostly.
Oh, okay. Hey.
I would count this.
Oh, yeah, this drive here?
Yeah.
Oh, yeah. Yeah, you just grab it. It's free because I think it's 72 cents a mile. What is the 26 mileage rate IRS? I think it's 72 cents, maybe? 76. Cool. Damn. All right, 76. So miles, that's 76 free bucks.
Yeah.
So mileage tracked via QuickBooks.
Yep.
Yeah, tracked via QuickBooks. So then when you have this, actually, this is where the accountable plan comes into place. So then the company will reimburse you for the mileage. You'll pick it up tax-free, but then the company gets it as a tax write-off.
Got it. Cool.
Yeah, it's tracked via QuickBooks and reimburse from accountable plan. All right, cool.
Sweet.
So you got that. Are you buying anything new or no? I guess if you work from home, how many miles are on it?
50 or 60,000. We drove to LA a few times, and I drive to the office every so often, but for the most part, it's just local.
Oh, it lasts forever.
Yeah.
Okay, so you don't need to buy a new car. Your wife doesn't need a new car?
She wants to get one soon because we have a baby and she's going back to work. And
wait, you guys have another one?
No, our first one, yeah.
I'm like, oh shit,
I'm not
bro.
Calvin
you guys went
Jenny,
back to back. You guys like, holy fuck. Okay.
Calvin and Jenny, when I first saw them at the event, they were like, are you having another one? Before anything else.
That's
like,
hilarious.
man, that's quick.
Hilarious.
I personally think I might be one and done.
Yeah.
Just because it's a lot of work to have a baby and build a business at the same time.
Baby is like a business, I feel like. Yeah.
It's like having twins. So it's a lot.
Yeah. Does your wife work too?
She's working now.
Oh, dang.
Yeah. So she is going down to Cupertino Tuesday, Wednesday, Thursdays. So she's thinking about getting a car if she gets this other job lined up.
Oh, okay. Yeah. You might want to actually spin it as your vehicle this year specifically for 2026. And then that way run it through the business. The general strategy for the business vehicle is buy in December. So buy in December and only use it for that month for business. So then you can attribute 100% use. So even if it's under 6K pounds, you can still get it's roughly 20K depreciation on it the first year. And you don't have to do miles. So you can do that. It just has to goes under company name. But if she's going to buy, you know what she wants?
Tesla.
Oh, nice.
Yeah, another
Oh, no,
might
another
be
Y?
either a 3 or a Y.
3 or Y?
Yeah.
Yeah. Did the Y with the third row come out yet?
It's coming out.
Oh,
If it's
yeah.
not coming, it's already here.
Oh, yeah. She should get that one. I saw
We have a Y already, so she doesn't want to get 2 Ys.
Oh. And then they got rid of the X and the S.
Yeah.
You could probably, bro, dude, if you want to buy a Cybertruck, the whole thing's
Oh,
right
fuck
off.
the Cybertruck.
Yeah.
Stupid.
Yeah. It's just, that thing's just so interesting. So I drove trucks growing up in Minnesota.
Oh, you're from Minnesota?
Yeah, from Minnesota. So, like, I had a truck. I bought the truck in 20 when Obama bailed us out, and he had hella credits for GM. I think I got a brand new truck for 26 grand.
Goddamn.
Yeah, and like that's why I drove like forever. So like the nice part about the truck though, you throw all the shit in the back, you fuck up the whole thing. The convenience of a truck is nice, but also I'm not sure if your wife wants to drive a truck. Maybe a 3. Then.
Unless it's a Rivian. She thought the Rivian truck was kind of cute.
Yeah,
but
that thing is bank. Yeah, that's
big. It's nice in there though.
Oh, I need to check one out. Yeah, so yeah, you could definitely do that. Definitely think about December if you want to pull the trigger then, but then get right off with it.
Gotcha.
Nice. Meals, entertainment, you probably read off all that already.
Yeah.
Just document receipt.
Cool.
Put the who and the why.
Who and the why.
Yeah, on there, take the photo. So that'll be good. Travel, oh yeah, your Thailand trips, just prorate if you're doing any business for it. Prorate.
I did a
doing
bunch of meetings while I was there.
Yeah.
On Zoom.
Oh, nice. Flight, travel, food. So just prorate part of it. Won't be 100%. And then the main thing is just to have the itinerary and the agenda of what was spoken about. So all this stuff, like everything, like all the shit you do, it's always about documentation. Yeah, so that's a big thing we've spoke about. All right, so that's good there. Do you guys do, so there's this thing in the California, it's called the pass-through entity tax, where your S-corp pays your California estimated taxes for you. It gets a write-off, and then you pick it up as a tax credit on your personal taxes. So this one, if you're not doing it, definitely do this one.
Okay.
Because let's just say if you have, I'm just use a super easy example. So let's just say you make $100,000 net after writing off everything, and then you multiply this by 0.93. So that's your California tax rate, 0.093. And then say your federal is 4%. So then essentially you'd say it's just a free $2,200 by doing nothing. So
Gotcha.
Obviously if you're like 200, 300 here, we're talking like 7 grand, is free money.
Yeah.
So grab that one for sure.
Okay.
So this one, there was a payment that was due mid-year. So there's generally 2 payments. But yeah, just bring it up to your CPA and be like, hey, did we do this? She probably did it already. You probably just didn't know.
Yeah.
She's probably just like, Billy, I need to pay $5,000. And you're like, all right, here's the money.
Yeah, that's what I do.
Yeah, it's usually how most CPA relationships go. There's 2 kinds of people. There's like, all right, cool, bro, just run it. Or they, wait, give me the itemized, like, detailed calculation of what this shit is. But yeah, I can save you some salt money there.
Got it.
So do that. You're not doing any, you're like all in on Arcshire, right? You're not doing any of the new businesses or anything, no side hustles or whatnot.
Nah, I'm all in with Arcshire.
Okay.
Nah.
Yeah.
If I do something, it might be like try to do something with selling a digital course or something like that. I don't know.
But it'll just go under the Arcshire line or your entity.
Yeah, exactly.
Okay, cool. So that's fine there. A year-end deferral. So this one is essentially you're front-loading all your expenses in December, November that you can use next year. So say if you are going to go to, say you guys have your conference for Arcshire next year in different city, technically you want to buy that ticket in November, December, because then you get the write-off for, but you'll use it next year. So anything that you want to buy, like anything you know you will use, buy it in December.
Got it.
So this is a timing difference. Yeah, I actually learned that from my mom and dad, where they had a restaurant. So then like December, they just buy a shitload of canned foods, all the pineapples and all that, and then just get a fat write-off. So you can do the same thing. Quarterly taxes, you should be doing it to avoid penalty and interest. And then you can just do the safe harbor method. That way you keep more of your cash. So safe harbor method is just usually about 110% of last year's tax liability. And then that way you just pay the least amount and you'll have fatter bill in April though, which is better because the IRS doesn't give you money back on your putting it in early. Itemized deductions. You have your house, so then you have property taxes, mortgage, interest, and then so you're using that. And then do you guys do any goodwill, clean out the house, donate toys, clothes, all that stuff?
So we donate toys and baby clothes and old clothes and stuff, but we don't, not enough for me to like care.
That's like not worth your time.
Yeah, I don't want to be like, oh, this baby shirt's $3 or whatever, because that's just take it, whatever.
Yeah, exactly. Yeah, if you wanted to, you clean out the house, max like $500 you can go without having to document every single thing. But if you're at 30% fed in state, it's $150. So it's like, it's not bad, but it's not great. It's up to you. Just want to be complete, donate old stuff if you want. There's like the world of taxes. Not dark world, but it's like, it's all legal. So let me go find where. So where can I find it? Gifting. So essentially these are essentially, it's appreciated asset donation. That's what it is. So essentially it's like you have art that you buy or land that you buy or whatever you buy. And then say you buy it for $25,000, then it gets appraised by an appraiser for $100,000. Then you can donate that $100,000 against your taxes, and then reduces your taxable income. And then you only pay $25K for that. So it's like, depending on what your income tax bracket is that year, it's a good plan B strategy, just in case you're like, oh shit, I'm not trying to pay that much. That's like a good backup one to do. More of a plan B strategy though.
Got it.
Yep, for sure. So, all right, cool. Let's see here. SEP, you don't need. Sole 401k, you don't need. Cal Savers. You don't have employees, right? Because everyone's a contractor too.
I mean,
like W-2 wise?
I could hire my daughter or something like that, right?
Oh, yeah. Put that down. Yeah, for sure. Let's see.
I got to figure about that because she can't really do marketing. Yeah. Really. She's still like
too small?
Too small.
She's one?
About to be two.
About to be two? Yeah.
But I have an index plan for her too.
Oh, okay. Oh, yeah. Okay.
$1 million baby plan.
Oh, yeah. This is the pod we got here ripped too. Okay, cool. Has an index fund already. Okay. Yeah, so I think generally speaking, what we see is 7 years old is the court case. But if there's a real purpose, you can actually go ahead and use her. Mm-hmm. It just has to be fair market value rate with job descriptions and then actual money movement.
You mean she can't get paid $14,000 a year for being cute?
Not quite, yeah. In our world, we're like, oh yeah, she's worth more than that for sure. Yeah, so SAP, we went that. Cal Savers, Mega Backdoor. Do you do a backdoor Roth IRA each year at least or no?
No, I just have a Roth IRA. I have a Roth IRA for myself to show clients that it's losing money when the market's going down.
Oh, yeah, because you use
I use the indexing strategy.
It's the floor, right? Where it's zero or...
It goes zero or you make something. Zero or you make something.
Okay. Has, but for funsies. Funsies to show loss versus... It's called indexed, right?
Index. So anything that's in the market is a variable type of account.
Yeah.
Anything that doesn't lose money would be an indexed account.
Okay, nice. Self-directed IRA. Did you ever work for anyone before where they had retirement accounts?
Nope.
Oh, you're a straight entrepreneur right away?
I had a W-2 job for 2 years. They didn't offer any type of benefits.
Oh, okay. So you have nothing to roll over.
Nothing.
Hence why you're self-employed now?
Yep.
Yeah.
I was poor.
Oh, man.
And back then I was making $15 an hour.
Yeah.
Went to Subway's. Sandwich was like $17. So I was like, fuck, dude. Like, an hour of my life is worth less than a sandwich.
So sad. That's fuck.
That's why I'm an entrepreneur.
Straight up. Roth conversions, so we're good there. Pledged asset line. Do you do much in stocks or not really?
Not really. I play around with it, but I don't like losing money.
Yeah, because this is the HELOC for stocks, loan against your stocks if you want. Dependent care. Do you guys? Oh wait, so do they have benefits for dependent care or anything like that? Who's going to take care of your daughter during the day?
So during the day she goes to daycare. So San Francisco has the free daycare.
Oh, sick!
It's $3,300 a month. So
wait, free or paid?
Free. No. So the city covers $3,300 a month.
Oh wow.
Up to $3,300. So my daughter goes to daycare.
Oh, sick. Yeah, so you don't need that.
I don't need that.
Oh, sick.
Very blessed.
That's hacks, dude.
Yeah.
Holy shit.
So they're taking a playbook out of New York.
Oh, because I got some clients where, dude, this lady, she's some high up at Workday. She pays $6,000 a month for her 2 kids.
God damn, yeah, $3,300
That's post-tax money too.
Jeez.
Yeah, so that's on brand, yeah, because that's 6 for 2. So yeah, 30. Wow, damn, that's a hack. That's good.
Yeah. Okay. So if you live in SF and you have lower income, then
that's why you gotta be self-employed.
Exactly.
Just spend the money back. Straight up, seriously, tax code's written that way.
Yep.
That's why we piss all our money back in. Yeah. My savings, horrendous. My enterprise value, my business, solid. Just don't know who's gonna buy it. Trump account, unless you pop out a new kid.
Trump account, that's basically a
$3,000 only if the kid was born in 25 though.
We missed the mark on that.
I was gonna say born in 24 then.
Yeah.
Yeah.
Right. That's just kind of like a 529-ish, right?
A shittier version.
Yeah.
Shitty.
I don't 529s either.
Yeah.
So.
5.9s. No. Then with what you know, you don't need a 5.29.
Yeah.
Like, because I learned myself is instead of a 5.29, you should just get a life insurance plan on your kid that she can draw and loan against when she's 18, right?
Exactly.
Okay, that's what I thought. Yeah.
529s, if you use that, it's strictly for school, and it counts as assets when they're looking at financial aid and stuff. If you're in a situation where you're making enough money where you're too rich to be considered poor, but you're too poor to be considered rich, it'll kick the kid off of any type of financial aid if it triggers that, like, if it goes into that gray area.
Okay. So, what kind of product do you use instead then?
An index plan, IUL.
IUL. Oh, so you use an IUL for the kid?
Yep. So my daughter has one. We're putting a couple $100 a month into it for her. So
and that's the premium?
Yeah. So for her, because she's young, the cost of insurance is going to be like
hell cheap.
So more of the money is going towards the cash accumulation. So when she gets to college age, she can use that money for tax-free tuition if she wants to. If she doesn't want to be a student, she can use it to build her business. If she doesn't want to be an entrepreneur, she can use that for early retirement.
Oh, sick. Our triple benefit.
Yeah.
Nice. Okay. So then on this one, selfishly asking now, so when does the premium stop on? How did you design your daughter's plan, if you don't mind sharing?
I designed it so that she just pays it into it forever. A couple $100. If you can't save a couple $100 as an adult, something else is wrong with your finances.
Oh, yeah. Okay. So you designed it where she just does a couple $100 for
forever.
Like,
so if she wants to put more in down the road, she can upgrade or roll over her plan to a different type of plan that accommodates for a bigger one. But for her, by the time she gets 50 or 60, I think she'll have $1 million something in tax-free dollars that she can use
in the cash value portion.
Cash value, yeah.
Oh.
And she could borrow against it. Let's say she borrows against it, buys a house with it, fixes it up, does whatever, cash out refi, pays herself back, has a tenant in there, infinite returns, do that over and over.
Oh, okay. So there's a couple $100 and then, so say they're like 70 and they're like, ah, fuck, I'm done. I don't want to retire. I don't want to work anymore. I just retire. Could you technically take a loan out to pay your premium?
Yeah, you wouldn't pay the premium. You would stop paying the premium, but you could take a loan and use that for living expenses. At that point, you're probably taking out like $500,000 a year in tax-free income.
Oh, okay. So you stop. Oh, so if you stop paying the premium,
it'll still
the plan doesn't
compound
go.
And grow. Still grow.
Oh, the plans don't go away if you stop paying premium.
No, that's a term plan. Or if you stop paying the premium too early.
Yeah.
And it doesn't have enough.
Yeah, it's usually 7 years, right?
10 years usually for
for a good one.
10 years if you want to live past the surrender period. Because how life insurance works is that most of the expenses are within the first 10 to 15 years, depending on the carrier.
Yeah.
So you have to, it's kind of like a mortgage, right? Yeah. First 10 years of a mortgage interest. So in those plans, the first 10 years is where they like front load a lot of the fees.
Yeah.
And so once you pass that, those fees go away and you can compound your asset.
Oh, so it's yours. The house is yours. Oh, so you just say you designed it 10 years and then if she wants to stop, she gets it.
It doesn't lapse.
Oh, nice. Bro, you gotta educate more on this. The fucking TikTok, dude, they make shit sound, I probably should stop watching so much TikTok.
Yeah.
Yeah, all right, covered all. You don't need American Opportunity Tax Credit, no one's going to college. Your wife's, or you're not going to go back to college,
Fuck
right?
no.
Yeah.
Fuck school.
Yeah.
I went to UC Davis and I haven't used that degree.
Ever. Yeah. Child tax credit, you should be getting it already. If you ever adopt a kid, you get up to 17 grand.
Can I adopt a cat? Doesn't work.
Watch California become the first state. Yeah, HELOC. You got a HELOC. Do you have a HELOC?
No, not right now.
Oh, you should grab one.
Just to have?
Oh, grab one, yeah. Yeah, so this one, so the HELOC, we should have the other one. I don't think it's in here actually, because, because when clients come to me, I give them some extra like business shit. This is only tax related because you can write off interest on HELOC, but so just grab one. And then, do you have a business line of credit?
Probably.
Okay, got that. Okay, so that one, business line of credit, same thing too. Just free money. I walked into Chase and they gave me like 197 grand.
Nice.
I think it's $50 a year to maintain. I'm like,
that's not bad.
It's for an emergency line, just in case like shit hits the fan. I hate credit. I don't like debt though. I'm like very anti-debt guy. But yeah, business line
consumer debt.
Yeah. If you can be smart about it, if I take that 197 and go fucking make 20% all day, But it's like, if I'm not paying it, then fuck that. Yeah, consumer debt. Yeah. Business line of credit. So yeah, that's good. Do you have disability on yourself?
No.
Oh, okay. You should check that one out too.
Okay, I'll check that.
Yeah, disability insurance. I bought the highest one. What was it? I think when you're solo by yourself, So apparently this is like the bigger one that people like us don't know about. I think California's max is 15 or 20K that they'll pay you just because you don't have the ability to work.
Okay.
So it's pricey though, about 500 a month or something.
Oh, gotcha.
So I'm like $6,000 a year, but then I'm like, oh shit. And then there's another business version of it where they'll cover payroll.
Got it. The reason why I don't have it is because my IUL has like it's not disability, it's like chronic illness, critical illness, that type of stuff. So if I ever get diagnosed with cancer and stuff like that, it'll pay out without me having to pass away.
It'll pay out. Oh, nice. Oh, and then on top of it, you have your loans from your IUL, right?
So how I have myself set up is I have 3 IULs. So if I have one for retirement purposes, I have a secondary one for the disability, that type of stuff. So if I get sick or whatever, I deploy that one. So I still have my other 2 for retirement purposes.
Oh, okay. Yeah. Okay. Nice. Yeah. As long as you get those like lines of credits, is free money. Because the big thing for, especially once you want to get in real estate, like my COO, we bought a house and then we didn't pull a loan on it. He just used his whole HELOC. And then eventually we refied back out. But because we could go buy the house really quick with cash, we got a better offer.
Nice.
So it's just, oh, fuck, you just need that quick part of cash and go get your money back later. So like, especially for real estate, that's the biggest leverage that you can use.
Yeah,
it's awesome. What Calvin teaches too.
Yep.
Yeah, so cool. R&D. Are you doing any AI stuff right now?
I should learn, but...
Okay, yeah, so you can actually get the R&D credit for making your own AI, like agents, software solutions. So it's, once again, so say you pour like $10,000 into an engineer, right? Then you can get a tax credit back for the smaller portion, but it's just free money that you're spending already. So it's just, why not grab it? Because you can. Yeah, it's just like low-hanging fruit that you can be like, oh, like everyday stuff that if no one sits down and talks to you, you won't know, right?
Yeah.
Yeah.
That's cool though.
Yeah, exactly. So yeah, definitely. The world is pretty much like, in my personal opinion, it's like media, AI. So like you need both. Right? Yeah. AI does fulfillment, media makes people aware of who you are. What do you guys do for health insurance?
My wife has health insurance.
So yeah, if it has an HSA plan, this has to be a high deductible. I think you can put $8,750 in it. Let's see, HSA 26 family contribution. Cool. $8,750. So you put $8,750 into this bad boy, and then it'll grow tax-free. Was it? You get a tax deduction on it. Yeah, so you get deducted.
Triple tax, grows, right?
Yeah, and then we take it out. That's cool. You can't put a lot, but I mean, it compounds, and then you can stack all the expenses.
Gotcha.
If you stack 10 years worth of medical expenses, and then you pull it out that 1 year, so you can let it compound.
Got it.
Yeah.
Do you have to invest it, or does it compound?
You just invest in whatever you want. I think mine's in health savings or health equity. I think I had it in the S&P 500. It just grows. So it'll just grow. I plan to never use it until I'm old.
That's what my mentor teaches, because we don't really consider HSA as an investment account. So you can invest, but you can only use it for health stuff, tax-free. So technically, you can't use it for anything else.
It's like one of those things that's let it compound. Unfortunately, we'll all be in the hospital.
As we get older, we get sicker.
Yeah, exactly. FSA, if your wife has it at work, might as well use it.
She's been using, I think she had one, and she's been using some of that for babies' medical expenses.
Yeah. Use as much as you need. Don't overfund it, though.
Okay.
Yeah, so say if you want to upgrade your glasses or get contacts, that's $400, and then your wife's going to have $500. You can put $600-800 into it, but it's use it or lose it, though.
Gotcha.
So only put like how much you actually need. You can roll over 2 months worth. Okay. But yeah, if you don't use it all, cool. You guys aren't moving, right?
Not anytime soon.
Yeah, if you move to Nevada, you'll save 9 to 13%.
Maybe when my business goes crazy, I'll stay there 6 months in a day.
Yeah, exactly. Okay, pass on that. Real estate, though. Yeah, I think you should, the short-term rental loophole. Have you thought about that?
I want to start investing in real estate. So I'm trying to save up enough for my first one. Yeah. But eventually, for sure.
Oh, yeah. I think this one would probably be the best one for you, the short-term rental loophole. Just because it's like crazy tax beneficial for you. That's like for almost like depending on how your business goes, either put all the freaking money back in the business or keep some profit, but buy a short-term rental. Because if you just do, like you don't need anything like crazy. So if you did 50 grand down, you could buy 5 times 5, 250K of a property. So
like in Ohio.
Yeah, 250K times, and then you say you do times 0.8 to get rid of land. It's going to be an extra $40,000 write-off for you. You put down 50K out, but $40,000 in terms of tax savings, almost call it 25%. That's like $10,000 of tax money that you would have to pay out, but 10 grand though, is tax savings. So then your true net, right? You put out 50, 1, 2, 3, minus your tax savings. So you're 40K out. So where's one guy that we do his taxes and he teaches people how to buy stuff? Dude, the properties he's buying are like around that 250K mark. So it's not like, it's affordable, right?
Not extravagant.
Yeah, but they're like in national parks and shit, but they're like cash flowing like 2K a month. So it's like, if you're annualize that over a year, that's like what, 24K? So then 24,000. So then you're out 16 grand. So you get all your money back in less than 2 years.
Yeah.
Which is like crazy, but now you have an income producing asset that's 2K a month. But you have all 4 of those, pretty chill. Now it's just like a nice like diversification, right? So this definitely add that just for tax purpose wise is like good. Like almost there's another guy that he actually handles my money, and then like they to use real estate as like part of their financial plan, but like the real estate you're buying is for taxes. Yes, it has to make sense, the cash flow, but like the big thing is to reduce taxes. So just add one in, start poking your head. I'm like, this house in liquidity, probably $50,000 of liquidity would always be good. And then you can want to start shopping. Yeah. This is tough though, because do you put 50K into a property or do you put 50K in your business?
Yeah.
And it's like, shit.
With my business, sweat equity is
goes
easy.
far.
Yeah, it goes far. So I just do a lot of networking and find people that want to work together with us instead of like having to payroll and hire.
Yeah.
Because I don't need to do that.
So yeah, depending on where you want to put your money. But yeah, definitely grab a short-term rental. Yeah, it's not too late in the year if you want to start shopping, because you can actually launch and go. And then usually what our clients do is they just do so you're like 50K down, and then like you still got piss like 20 to 40 grand in furnishings. So they'll just get a 12-month interest-free credit card from like Chase. And then they'll stack it on the Chase and then pay it off next year.
Gotcha.
But they'll get all those deductions this year though. So like you can pretty much hypercharge a fat loss against it. Yeah, there's one that I did. The guy made around like 2, and then he did the short-term rental loophole and wiped off the whole 270.
Oh wow!
And it was only off a $600,000 house because it was like in Indiana, where the land value is like nothing. So the building value is high, so you can depreciate most of the building.
That's great.
So yeah, short-term rentals loopholes big on there. Grouping, you don't need 1031. You're okay. Yeah, you pair it with the cost seg, of course. And then, so those would be your big ones. Oh, this was the donation stuff I was telling you about. And then foreign earned income exclusion, don't need that. Income shifting would be possibly good. Do you guys support anyone financially?
Not right now. My daughter.
Yeah, your daughter. Yeah.
Outside
siblings,
of that? No.
Family, mom, dad, anything like that? Okay. Yeah. Okay. Got it. Okay, you're good. Yeah, because the thing here is just sometimes we have some clients where like
they hire their parents or
their
something.
parents are in no bracket, because my parents retired. So I could toss them 96 grand, and I think they pay 26 tax brackets. Very foul joint. Yeah, they would. Yeah, I could toss 100 grand this year, income shift them over there, and then they're at 12%. And then my year's looking pretty shit. But yeah, I'll probably be down here too. So if I actually did make some bad bets, and actually let's say I was at the 24% bracket, I could actually arbitrage and put us both in the 12. So you can push money towards that.
That's awesome.
So that's only if you have people that you can support and move the money over there. You just cover their tax bill essentially.
Gotcha.
Yeah, they're just in a lower bracket than you, and then fish out the money back out. So that one's there. And then, so this gifting, let's see, you're going to be fine there. You don't need any UGM table. You're good. Estate planning. Estate planning, you guys have, you have your trust.
Living trust.
I was gonna, you of all people, I'd be shocked if you did not have one.
I have that.
Yeah.
That was one of the first things that I got when we got our house.
Oh, okay. Good. Yeah. So here, all right. So I'm going to make here, clear this out here. And then, yeah, so essentially, yeah, you can just rip this to your CPA here.
Sweet.
And then just making sure you guys have all these. I think based off talking to you here, I think the big one that you should really, like this one sounds like, just confirm you have this one. This is easy money. You should definitely grab that one if you guys aren't doing it already. Let's see here. S-corp good, reasonable comps good, bookkeeping, yeah, receipts. Accountable plan, have this, just this more of a cover your ass strategy.
Yeah.
Augusta, 14 days market rate. So market rate, the one thing that we like to do is go to peerspace.com and then
see what my
see
area,
Daly City, and then you just go to, don't know what happened. Daly City, and then CA, and then let's say business event. Does it work? Oh, okay. Nothing? What if I just search for anything? Guess it doesn't work. But I'll put the website here. Normally what we like to do is this peerspace.com. Just grab the average of the highest 3.
Okay.
And then just milk it. So if it's $200 an hour, and then just document that, screenshot that for proof.
like 6, you can easily get 14, like just 14 agent meetings, right? So then indirectly, you're making a $22,000 legitimate deduction, but this is 22 off your S-corp, tax-free to you, 0. So it's
Gotcha.
like, yeah, times say 0.3, it's free $6,000. So it's like,
that's not bad.
Oh yeah, so it's like, hey, free money, screw it.
Yeah, $6,000 is that's almost maxing out a Roth IRA right there.
Yeah, it covers the premium for your daughter's IUL.
Yeah.
Do that one for sure. And then what else here? That one. Probably just grab these just for free.
Yeah,
They're free.
I was thinking about maybe looking into a HELOC.
Oh,
before we talked, so I was like,
oh yeah, just grab it. It's free money. Yeah, leverage is king. I've had mine. I've never used it.
Yeah, it's like having a really powerful credit card on.
Yeah, it's like a fat ass credit card for no reason. Yeah, HSA. If you guys can qualify it, why not? That one's probably your biggest one, and then I think this one's your big one, just to start, because real estate, it's just like
it's always going to be a good thing.
It's always a good thing.
Yeah, I want to get to his level with that
empire. They're just going. I think the yellow ones will be the best ones for you here for sure, and then that way you just rock and roll. Yeah,
sweet.
Then but you got some free money here because 8750 times 0.3, it's $2,000. So yeah, 2K sitting here. That'll be super easy to have. This, I'm sure where your net is, it's at least, say if you show 100 on the books, at least 2. Obviously it scales up. 4, dear Augusta, 6. So almost just 10K popping around. Just make sure you grab it. Yeah, so fire that through. Let me share this over to you, man. Yeah.
You can send that one.
Okay, got it. Here we go, man.
Sweet, thank you. I appreciate it.
Oh, 100%, man. Yeah, this is what we bill people for.
This is literally what we do, actually. Yeah. This, and then we afterwards, we just charge them this time, and then we enroll them to a membership. And if they want a membership, then we just actually go do it for them, though.
Got it.
Yeah, or hold them accountable. Some stuff we can't actually do, hold them accountable, but implement it all.
Got it.
File, do the books and all that stuff. Just so when you refer your clients, this is actually experience what they're doing.
Gotcha.
Yeah, and then so we'll do the implementation. What the implementation is just all right, accountable plan, instead of me sending the sheet. You're hey, here's the sheet. Did you do it? Not yet. All right, cool. Fuck it. I filled it out. Can you please sign it? Yeah. So that's what we do in implementation. And then we revise your plan twice a year.
Gotcha.
Yeah. Appreciate the referrals too, man.
Of course. I'll probably have more coming in because I'm still building out my practice. I do a lot of OnlyFans type of clientele or adult content clientele.
That's good. Because even if you just nail that space, there's this one dude, I'm sure, you probably don't follow much tax people. There's this one guy, Duke Loves Taxes or something. This dude had that OnlyFans niche for a bit, but then he faded from the earth. So this guy was on fire. He was dope. I was actually in his program. I loved his fucking personality. Dope ass dude. Yeah, right here. And then
oh, I know Mia. I know this guy too, Mallory.
Yeah. So he was on fire. And then apparently his story though, he went through a couple mental health things, almost committed suicide. Then he came back from the dead. I wonder if he relapsed or something. But Duke was the shit. Yeah, he was putting out some fucking fire content, and he was also training other CPAs. So I was seeing what he was doing. I just showed him some love. It was $400 for his programs. Fuck, bro.
Yeah.
But yeah,
Nate's cool. Guy. Nate and me are cool. And then saw them at XBiz this year. And they just started a financial firm called Floorplay. They do investments. Mia is also a financial advisor, so she does more of the RIA.
Oh, she does that kind of
that type of investment.
Oh, managing, selling shit. Yeah.
And Nate is a CPA and tax lawyer, I think.
Lawyer. Okay.
They partnered up.
Oh, okay. They go hand in hand. But yeah, Duke was the shit.
Yeah, there's another really cool person that I'm friends with. Her title is the only consultant.
Oh, really?
Yeah. So she does a lot of work with exotic dancers, content creators. Things like that.
Oh, sick. Yeah. Okay. Yeah. So I think it's a hot industry.
They need help because they're underserved.
Yeah. Plus, the tax liabilities are crazy. Yeah.
Their books are usually not that great.
Oh, their books are ass. Yeah, we had a couple that were going for a bit. Then I think they just stopped and their income just died. Yeah. There's this one lady that we're serving. She was on a boat. And I'm like, fuck. How do we get a hold of you? I was like, shit. Oh, I passed off to my manager now. But last time I remember taking a call with them, it was just the choppiest thing. It was on their boat. And
satellite phone type of thing?
It was choppiest shit. I was like, you can just turn off your camera. I can't even fucking hear you right now. Can you just dial in? But yeah, they were on the boat doing their thing. I'm like,
that's crazy.
It's a good industry to be in. So if you kind of just grab all those folks. I don't know how you market. I don't know where they hang out and shit. The hardest part from a market part is how do you hang out with that niche?
You really can't. It's you only get in if you know someone. It's kind of like being a magician, right? You have to know someone to go in. And then if you're weird or if you behave in a weird way, you're blacklisted. So I'm always very like respectful. I feel like a vampire most of the time. I'm at the door. I have to be invited before I can go like, let me work with your stuff. So it's a great community to work with because they're very cool people. They just want help because a lot of times when they go to like CPAs or banks and stuff like that, those individuals don't know their world. So they just kind of kick them to the side. I don't know if you've seen like the debanking stuff that's been happening to a lot of content creators. Like banks, like I think there's Chase, if they smell OnlyFans on you, they will ban your entire account and ban you from every chain.
Oh, so if your direct deposits have that little...
If they suspect sex work of any kind.
Wow.
Yeah. They do not like...
Do you guys use... What banks do you guys go to?
Off the record, right?
Yeah. We cut this out. Yeah.
I just tell them to say that they're sales professionals, or sales director for a marketing company, so that they don't have to be because technically it's still true. So they don't have to say, oh, I do exotic dancing or I do content creation of that nature or whatever. You just got to know how to navigate those spotlight questions. And with OnlyFans, it's not just porn.
Yeah.
People, there's athletes that are on OnlyFans. There's comedians that are OnlyFans. He's like he's undefeated. He's Asian dude that does boxing.
Oh, for real?
Yeah.
Oh, he's on there just doing boxing videos?
He was like sponsored by OnlyFans.
Oh, wow.
Yeah.
Holy shit.
And he hasn't lost a fight.
Holy shit. I didn't know that.
So so if that guy can be on OnlyFans, like anybody can really be on OnlyFans, not just like a porn platform.
Oh, yeah.
It's built off the back of sex workers.
Oh, yeah. There's this one bank or that one company that we're doing a little bit of...
Carrot. Oh, okay.
Yeah, we're doing a little bit of work for them back in the day. So I met the founder before. And then, they're towards creatives. Looks like they've changed their position a little bit. But it was like a banking platform, too.
Gotcha.
So,
yeah, one of my friends did a podcast with them before.
Oh, with Eric?
I think so. Yeah.
Oh, nice.
So I think Kazumi was on Carrot on their podcast before.
Yeah. Okay. Yeah. So he was. Yeah. Eric's pretty chill dude, but no platform or another tool for you guys.
Gotcha. Yeah.
But shit, man, this is dope. Thanks for swinging through.
Of course, dude.
Yeah.
And I would love to show you some more on how like IULs work. I think I showed you a little bit, but like a more in-depth version. So if, let's say you have a high net worth client.
Yeah.
Talk about things like financing, which is they can leverage the bank to fund their IULs, and the bank will put 5 times the amount of so it grows their shit a lot faster. It's a way for like high net worth individuals to get tax-free returns. Because they're locked out of IRA or Roth IRAs.
Yeah.
Unless they want to pay after-tax dollars to do conversions. And why would you ever want to pay taxes willingly, right?
Yeah, just wait until that time comes.
Yeah.
Yeah.
So
nice. Yeah.
Lots of really cool things you could do with cash value life insurance.
Oh, nice. Dude, we're going to have a podcast series. Yeah. First we do the baby one, $1 million baby.
Yeah.
And then premium financing. Yeah. And then what's the third one you said?
Executive bonus plans.
Bonus plans, yeah. Are those like your normal like bread and butter ones?
For me, like normal IULs for regular people, that's my bread and butter, but I know how to do all the other ones because it's just a different version of different way to structure it for those higher net worth individuals.
Yeah.
So like they're a really powerful tool. It's not the only tool that you should have, but it should be part of the overall ecosystem of your portfolio. But most people don't do it properly, and that's why, they don't design it right. That's why they have such a bad rap.
But that's why I'm like, oh shit, because I think there's a Robin Hood way of actually doing it the right way. But I feel like too many people took advantage of it.
I have one of the highest retention rates in my entire company. People that I work with, I design plans for them that stays on the books.
Oh, so your plans don't drop. People actually pay the premiums.
Yeah.
Yeah.
Because I design it in a way where it's not forcing them to put more money in over time. It's like comfortable here. Just stay there for now, and then when you start making more money, then you can bump it up.
Put more in.
Then you can bump it up.
Yeah. Damn.
So, yeah.
Oh shit! I didn't know that's one of your bigger flagship ones. That's you do. So you boost the most out of Arcshire for those.
I try.
Yeah, that shit's crazy.
I try.
Yeah.
But I'm not gonna say I'm like the best agent.
Yeah.
I work with a lot of really cool people, and I'm very grateful for the clients that I do work with that allowed me to be the top producer.